let me mute some of this stuff here. Mute. Too many things I gotta mute. How do I mute this? Okay. And I think I'm good. What's up, everybody? Oh, my bad. A mess. Give everybody an extra minute or so here while I gather my stuff. What was something else I wanted to look at here? Oh, yeah. How's everybody doing? Hope everybody had a fantastic week. Tomorrow's Friday already. Another week has gone by swiftly. Yeah, I love when people come on and just throwing symbols like they want me to tout their crap. They want me to pump their shit. He's my cussing. There's no reason to cuss this early in the program. All right, the screen is okay. Somebody give me a screen. Mario, everything good? The screen and the voice and I gotta take some of this off. Hold on. We don't need all this stuff on here. Oh, that's off already? Yeah, that's good. We're good. All right. No reason to occupy too much of your Thursday evening tonight. I'll go through some of the more important stuff here. Again, I don't really have too much to share on individual names or ideas because of earnings season, as most of you know. So I'm not going to spend too much time on names, if any at all. But if you guys recall, over the last couple of weeks, we've discussed how, I guess it's a couple of weeks now, not more than that. But I basically was explaining to you guys how there was a pocket of the market that was somewhat concerning, that had me feel uneasy in a sense. And even though I didn't feel like it would be anything too dramatic or apocalyptic in regards to the major indexes or the market as a whole, if you recall, because it's really not that big of a part of the market, the speculation was enough where it really was tricky to try to get a handle on just the overall climate, especially as we lose our edge from sweeper activity and we get into earnings season, right? So Basically in simple English, it was, I think, a very opportune time to take some hefty profits in names that were up significantly. Know what you own, make sure you're okay with any positional risk you still have on here, especially in stuff that has appreciated nicely. And on top of that, I think it was also a good time to kind of rein it in a bit, not look to put any aggressive new risk on as far as on the position side, overnight risk. The playbook kind of called for more of a tactical nature and time frame, to be more nimble in a sense, as opposed to what it was, earlier in this trend, earlier in this rally, a couple months ago, even as early as a month or two ago, where it was a good time to look for things to buy and kind of hang on to them in a sense, right? So we kind of lost that, and it's just the climate has changed enough to where we want to be a lot more nimble and selective and prudent about things. So just giving you guys kind of a backdrop, especially for anybody who's new. People have a tendency to come on the webinar for the first time, not have a clue of what I'm talking about. That's generally how we were seeing things, the things we look at on a day-to-day basis in the Steam Room and on this webinar weekly, okay? So what has changed since last Thursday? Well, I think the most important thing, the most interesting thing, because I think it was a big part of the problem, was a lot of these bubble stocks, as basically I call them right now. A lot of these bubbly type plays got hit over the head quite nicely. All right, we looked at a million. It felt like that. I mean, a million, but a lot of these names that are up 200, 300, 400% this year and have gone some extremely parabolic. But you have, I see names that have their 50% off their highs over the last few days. So again, what was concerning, and that was the most concerning part about everything we looked at the last couple of weeks, right? That all the concerns stem from there, because here's the thing, and just to rehash kind of what we were saying, you could be constructive on the market as a whole, right? But some people take that information, right? Especially more retail traders, in a sense, they can take that information and go buy an RGTI into the parabolic highs because they think the market's still okay, and they're down 50% right now, right? So that's kind of the point I was trying to drive home, more importantly than anything else, was that even though the market looks fine, I think the market as a whole, and especially certain parts of the market, still look good in a sense. That doesn't apply to everything, and there are some specific hot pockets that it's quite the opposite in, right? We also talked about how, if not, what we saw back in 2021, we were at something similar to what we were seeing in the spring of 2021 in the speculative part of this market, right? In spring 2021, a lot of the SPAC names, a lot of the high growth, no fundamental story, hype stocks, all were coming off huge runs. Retail was going crazy in these things for months. And even though the market continued to make new highs for the rest of the year in 2021, those stocks never made a new high and started their correction, right? So again, even if it's not exactly that, we were seeing the similar characteristics, right? The same ingredient of something like that. So yeah, I think it's good when you start to see that and the market's correct. You always rather see that sooner or later, because if you don't get the correction in these things, doesn't mean it goes away. The risk keeps growing in a sense, right? So I think it's really constructive that we have seen that already. And just to get an idea quickly, because now that that balloon has been pricked in a sense, a lot of air has come out rather quickly in a lot of these things. I don't want to spend too much time on how hot, as we like to call it, right? The speculative fever was in this area of the market. But I just got a couple of charts from JP Morgan showing how significant it was. All right. This is one here showing how, and usually when you get kind of this fever pitch speculation in sentiment, when it gets that frothy in these type of areas, you get this crowding effect where retail or whoever is making money in these names, they don't want to be bothered with anything else for good reason, because all the momentum, all the money has been made in this part of the market. So they just spend and focused all their time, all their money on these things. And then eventually, unfortunately, they get hit over the head and lumped up, right? And that's kind of what we've been seeing over the past week. So that's what this chart is showing you here. Again, they're pointing out, this is from, I think, yesterday, but they're pointing out how kind of what we were looking at over the past week or so, a significant area in sentiment and emotion in these speculative names. Again, there's a lack of fundamentals, right? These are things that are just driven on pure hype. And it's bad, guys. It's bad. Again, it's hard. I always question, because now you have social media, we have access to more squawks. Like I remember, again, back on my grandpa chair back in the day in this market, you had access. You could even hear a peep about what anybody was doing, but outside of the guy next to you. Now you go on X and TikTok. They're showing you what they're buying, or what supposedly they're buying, how much money they made. So it's more out there in the open. And I think it makes it, what's the term I'm looking for? You know what I mean? Like I can go on social media, I can feel bullish and then go on social media, and in 5 minutes, I'm ready to go back into my bunker, seeing some of this stuff, So that being said, though, it was bad. I mean, there was a lot of heat. You could see, people acting like they know, retail traders acting like they know the businesses of these companies, talking about the fundamentals, where in fact, right now, I don't care what they know about these stocks, there are no fundamentals there, right? Many of these names have zero revenue, nowhere even close to making money. Forget about that. So all that story is all fine and dandy when the momentum's there, but when the momentum leaves, that story, you can take it and stick it where the sun don't shine, right? It means nothing. And we saw that in 2021. And we're likely going to see that again, even if this is not a major top in this area, right? You're going to see these type of corrections where these things can come off 50, 60% off their highs in the snap of a finger. Okay. And not only were we seeing on some of these indicators, you see it in the option market. You take these speculative bubble type names out of the equation, and a lot of these sentiment readings, they're nowhere near where they are right now. Right? Here's one showing from Deutsche Bank. This is showing opening bullish positions volume in the option market. Okay, and the last time we got anywhere up in this neck of the woods, again, was that high in 2021. So just a lot of stuff we were seeing again here. Okay. So again, I don't want to spend too much time on this area. Here's again just one of the names, Rigetti, and you could see obviously the move. And it's interesting. Some of them into upside niners were kind of an exhaustion signal. But, you look at the chart and you're like, this almost looks like a healthy correction in a sense. But the stock was, in the 60s and printed, I think it was $30 or close to it yesterday. So that's quite the hickey. Now, when you have these names come in so aggressively, so violently, a lot of times there will be stickiness here now because you get people who did trade and make money and raise cash. They buy the dip because it's possibly oversold on a shorter term basis, and you get shorts who were shorting the name they cover, and that creates a bid, right? So when you get this violent move, at some point you're going to get some stability. The Trump news certainly helps that the White House is looking at these names. But me personally, again, I still would be extremely careful in this whole area of the market, right? If you're looking to be nimble for trades, yeah, there's going to be a lot of movement. You got to be careful in the option market because I think they're going to rob you, especially into earnings season here and all the volatility. These things aren't cheap, both sides, calls and puts. So it's just really not an opportune time, in my opinion, to really focus on these things. You the only point I think in a lot of these repeat names where you can come back and look at them and have somewhat of an edge again off the flow is if they go dead. You need them to go dead, right? You need them to come in, even if RGTI, let's say the lows are in here, you need the stock to go dead, the options to go dead, the interest to go dead, right? For in my opinion, you need all that to happen before that I think you get any edge out of the flow again in these names. Now, again, I know there are a ton of people who think you buy RGTI here, and you get another parabolic move, right? So I know my opinion is not the consensus out there, but for me personally, I'm staying far away from these things outside of even intraday trades. That's basically what they are to me at this point. Okay. All right. So again, that being said, I don't want to spend too much time on that because that was really the topic of the webinars for the past 2 weeks ad nauseum. I know some of you have been sick of hearing it for a while, but hopefully it saves some folks some money and getting lumped up because those things can leave a mark, right? So let's move on to now some of the other things outside of that I felt because of that speculation, the heat, there were some interesting things, dynamics at play that it gave us an opportune time to chill for the next few weeks and see how some of these things that we're paying attention to shake out. Okay. One that kind of coincides with some of these speculative area of the market, and I think it's going to be important, especially for those type of names, is liquidity. Okay. And again, I make the point, this is not my game, liquidity. It's not something I follow closely. I don't know the inside dynamics of it, but I follow a couple of sources over the years that I have faith in. They know what they're looking at, right? And they take that information. And that's where I get my information on the liquidity front. And from what I'm hearing from certain liquidity people that I follow is liquidity right now as a whole, we're at an interesting period here where, we had this influx of liquidity from April all the way up until now, and it's kind of topping out in a sense, right? For the pace that we were seeing to continue, we are going to need the Fed to take action, right? I'm hearing from some outfits that I follow something as major as some form of QE at some point. Okay. Now, again, I don't really have too much of an opinion on it. I think the main takeaway for me, and I think for us as a whole, is that this has been a big driver of a lot of the speculative stuff in this market. Okay. And even if it's not as dire as some of the people I follow think there's a chance of it happening, it's slowing down, right? It's slowing down. And what I think a lot of people confuse, they automatically extrapolate the Fed cutting rates as a huge liquidity boost for this speculative area of the market. But there have been times where the Fed cut rates and you see liquidity actually drain. Okay, so it's not as easy as just the Fed cutting rates and you buy every $2 stock because they continue going to 40. All right. Now, I mentioned to you guys, it doesn't have to be a huge burden on the overall equity market, right? You may see, again, if liquidity does become an issue, but not a major issue, you may see a rotation and a focus back to quality, back to fundamentals, back to the cyclical parts of the market, maybe, right? So there's a variety of ways that it can go. And that's why I think it's an important time and a perfect time to chill out and see how this resolves in a sense, right? If at all. And right now, outside of that regional banking hiccup that kind of just stirred up, right? After we started talking about this liquidity problem, as you guys know, that little hiccup kind of got brushed under the rug for now, not as major as people were fearing, and that's good. But let's see again, right? Somebody used the adage, when you find one cockroach, you just don't find one cockroach, right? When you find one, usually there's a whole bunch of them. But again, I think we have time on our side here because of other signals we're looking at that are telling us there's no reason to get aggressive and stick our neck out to see how some of this stuff shakes out. Okay, where are we here? So liquidity, I think, is a perfect segue into the credit markets, okay? Because if you have a liquidity issue or something out of the banking sector like we're seeing and it's becoming a problem, you're going to see it. You're going to see the concern show up in the credit market. All right? Throughout my experience in this game, that's one of the first places, is the first place to show up. Okay. And what was interesting about this regional banking situation is that even though it made news and caused some volatility in the equity markets, the credit market signals really weren't showing much concern at all over the banking stuff. Okay. So to rewind, before we had this little round of volatility in the equity market, we had some divergence going on, right? Where the credit markets were kind of signaling weren't confirming risk on, even though equities were. And then we had this little round of volatility with a little bit of a pullback in equities and kind of caught up, I would say, to credit, as you can see here. All right. What happens from this point on, especially if there's more noise around us, and we'll get to that in a second because we're going probably into one of the noisiest weeks that we're going to see next week. I think it's really important to keep tabs on these credit market signals. So again, nothing major out of this yet. I think it told us that this first little hiccup in the banking sector wasn't really anything to get concerned about. And I think it's important to keep tabs going forward. Okay. Here are credit spreads. This is a credit spread proxy. All right. So what we don't want to see is, again, just reviewing what we were looking at, we don't want to see this major divergence build over a lengthy period of time here, right? If the equity market pushes higher, we want to get those confirmation signals from these other things, like the credit market. Okay, we don't want to see price rules, price means only price matters. That's the old thing. But for me, if equity markets rally and I'm not getting confirmation signals from stuff like this, price doesn't mean jack shit to me, right? Because that's kind of that's a trap I don't want to walk into. And that's exactly what we saw earlier this year, right? Equity markets continued higher, but you had a really big divergence starting to work here in the credit markets. And same thing here, rally, S&P 500, and credit markets not confirming that risk on. All right. So again, just another thing to keep a close eye on, as I am, over these next few weeks. being that we're going into earnings and we don't have any edge from sweeper activity and everything else. Okay. VVIX, right? They get just these things all line up with each other. We were seeing some divergence in the vol space, in VIX, in VVIX, as equities were grinding higher. So volatility in VVIX held a bid, right? You remember we had that discussion. And with the offsides positioning in VIX futures, meaning a lot of shorts, you can light a match for a big move in VIX. Now, again, it doesn't have to be a catastrophe for the equity markets. It's a short-lived event in a sense. But this is what you kind of got to deal with, right? These are the landmines you have to deal with when you're seeing these things. All right. We got a little further of a VVIX unwind today, which is interesting, ahead of the CPI, which I think we're getting tomorrow. So that kind of divergence, in a sense, is getting washed away. So we'll look for it again as a warning signal of a potential little rinse coming in, going forward. Right. And again, these are things I think we have to continue to keep an eye on, while correlation, you remember we looked at this and spent some time, while correlation's down at these levels, these are what are early clues about these potential landmines that may show up. Now, again, you may say, well, I don't have to worry about the landmines, right? If they're going to be short-lived, let me sit through it. And, as long as I hang tight, I'll get through to the other side. Okay. That may be the case, but we talked about why that doesn't make real sense now, as far as on a risk-reward outlook, right? Looking at this game from a risk-reward perspective, that thinking doesn't make much sense, because when correlations at extreme lows, the reward side of that equation gets eaten away at, right? Just because the market comes back doesn't mean every stock comes back with it. And you're very likely to be in a name that doesn't participate in the market when it snaps back. So if the reward's not worth it, and now you have added more of these added short-term risks, what's the incentive? Why? Unless you're a degenerate, or unless you're trying to turn a client's account, if you're managing money, what's the true incentive to get aggressive in front of that? And that's generally the point I'm making. Right? So correlation, you had this spike with volatility, right? But again, the problem is if these spikes are just minor spikes, and then the market and volatility is going to subside and the market's going to come right back, you're going to be back where you started again. And guess what? We are right back to where we started before that vol pop. Right back. Right? So that risk doesn't go away. It's still here. Right back again. All right. So that's a problem, again, that we have no choice but to deal with until it resolves. Here's the move. This is the volatility. This is the VIX, of a sense, of the credit markets. And the good thing about what we're seeing here, again, with some of the other credit market signals, not really signaling much of any angst out there. Okay. If there was a liquidity issue in the banking sector, right, any sort of real problem, you would think you would see some of these things react a lot different than they have been. Now, maybe they will in the future when it does matter, okay? But up until this point, these things have been really quiet, okay? So the main takeaway is there's nothing major to worry about here, right? There's nothing major to worry about as far as an overall market problem. What else we got here? I think I'm close to done the majority of these things here. Let's see. All right. And here's, I'm going to get to some of the good things here, but there's a little bit of a disclaimer. CTAs, you're hearing a lot about this from several different places. Systematic funds, as we like to call them, the CTA trend following funds, and you got vol control funds that trade solely off volatility. They have a lot of long exposure, okay, and and they have short VIX exposure, that when the market starts to turn and lose momentum and starts to break certain levels, you get these guys starting to unload some of that supply that they've built up over the last few months. Okay. Fortunately, if you're a bull, the market kind of held some key levels or didn't really get below some key levels, right? And that's usually how it happens initially. Like usually when these levels start to crack, unless it's a major catalyst, you don't just cut through them in one shot, right? You get close, butt your head, rally, get a little closer, butt your head, rally, and then it takes one little catalyst and you cut right through them all, you know? So again, these levels change week to week to week, but you get an idea. These levels, depending on what model you're following, they're pretty close, though, in a sense. They can be followed. They can be tracked. Okay? So CTAs are not buyers right now. They are selling, but not at an aggressive rate yet. Okay? They are not a major problem yet. If you remember, we were talking about them the last couple of weeks to keep an eye on the downside because they may be pulled and get involved. They're sellers, but not in a major way yet. Okay. So some of the bullish stuff, right? So those are all the things that are concerning enough for me to chill out as we go into earnings season and try to look for clues on what the other side of this may look like, right? Whatever this may be consolidation. This may be the start of a deeper pullback than what we saw already, or this may be a move to new highs and a continuation of the uptrend. Okay. I think the major thing, though, is not the answer to any of those three things I mentioned. Is what outperforms? Where does the momentum, where does the hot money go in those scenarios? Okay. Because what it's likely not going to be is an sustained everything rally with what we're seeing right now. Okay. So if we get consolidation, I mean, we could sit here and just complain about chop for the next few months, or we can try to look for clues and pick up on maybe major rotation into cyclicals, and as we discussed, right? Okay. So that's kind of that's obviously the main objective here. And you know, we haven't had many clues yet. The only clues we've had so far is that kind of that bubble, that spec bubble has been pricked. Okay. Next week, we start to get some of these big AI names. And the reaction to the earnings and guidance and CapEx and all that stuff is going to tell us a lot about how the street, feels about these names where they're currently priced. Right? I think the risk, and we'll talk about this if you like in a couple minutes, I think the risk in a lot of these hot AI names, okay, because it's not fundamentals, right? The speculative names that was really concerning, they have no fundamentals, okay? A lot of the strong stuff in the larger cap names are driven by fundamentals for the most part. Okay, they're all profitable and they all have explosive growth. The problem is that's been the main area of growth for a while in this market, and they're over-owned. Everybody already owns all these names. If you start at the mega caps, we talked about it, right? NVIDIA, Microsoft, everybody's in these stocks. Every fund has built a position in these names already. There's no fund out there without exposure in these names. Not happen, right? So that becomes a problem as far as upside is concerned. Is they get expensive, and even though the fundamentals justify it, right? Everybody already owns them. Where's that new buying, that sustained new buying, going to show up? Okay, and then you look at some of the smaller outside, just outside the mega caps, the larger cap names that are tied to AI that have done well. Many of those hot names we all have talked about over the past couple years on this webinar. And, these things, again, for the same thing, they're up significantly over the last couple of years. And, their earnings are great, but what happens? They have a hiccup this earnings season. And I think that's what I'm getting at. That's the risk, right? These names, I think what people are very easily going to do, they're going to rotate from these speculative names into these quality AI names. And if there's a hiccup, I know nobody thinks there will be, but if there's a hiccup this earnings season, out of any of them that takes them down, there's a lot of risk there. Now, I don't think they come down. They don't scare me like the spec names, right? Like, I don't think they come down 50%, 60% off the highs, right? But again, on a risk-reward perspective, ahead of earnings, I don't see it. Okay, so let's see. Next week, we get some of these big names. Let's see how the price action looks. More importantly, let's see what the flow looks post-earnings, right? Because we're going from a period where pre-earnings flow is completely useless, but post-earnings flow is the most important, right? So I think we have a lot of things to pay attention to just because we're not actively chasing stuff over the next couple of weeks. I think there's a lot of stuff to pay attention to for clues. All right, so I kind of segued names into that as well. Okay, so here's kind of some of the more bullish things out there now, right? The overall market, in a sense. Is the overall market as bubbly and over-owned as the speculative names or even some of these AI names? Not even close. Not like whoever, anybody who makes a comment like that it's absolutely clueless. Okay, as a matter of fact, it's, I think, the complete opposite, where all the attention and all the focus has been in these hot areas that everything else has been completely neglected. Completely. Right? And what we're starting to see, we have already started to see, this has been going on for a while now, gradually. But what we're starting to see is the antennas, the tentacles from AI spread out into some of these areas. The industrials being one of them. The utilities being probably the biggest one of them. Right? And I think, personally, we start to see more of that. Right? We start to see more of this, the beneficiaries of AI and the expansion of AI spread out into other areas, right? If all this money is going to be spent on AI, right, and the growth of AI, these other areas of the market have to benefit. It's really difficult for these other areas of the market not to benefit. Okay, so you have that, and you have now the possibility of the Fed starting a rate cutting cycle. God only knows what else it brings with it. Okay, but lowering rates, which it didn't have, right? And you get the help of any economic growth, right? Because these names have been completely ignored because they're so economically sensitive that there's been no growth there. So you start to get you start to see some improvement on the growth side of the economy, on the confidence side of the economy, and you're going to have a real nice tailwind in a lot of these other areas. And that to me is the most bullish part of the market. All right? That to me is the most bullish part of the market, especially on a risk reward look. And guys, I fall into this trap too. It doesn't mean that, because the first things we look at is like FCX, Freeport, which is the copper play, or an Alcoa, aluminum, or energy names. You start to look at the big energy names. when you start to get that rotation, we already seen it, okay? It's not just the big names that get bought and are involved. You start to see new names in these areas, right? When the utilities became an AI play, right? You didn't just see the old traditional utility names that always get bought when there's rotation into utilities in the market. Right? You started to see new power, new utility type names. And then eventually, as that gets longer in the tooth, that trend, it goes down to even the more aggressive names like an Oklo, an SMR, the Bitcoin miners, which we just saw. All right. So these other areas of the market doesn't mean they have to go into these old, boring, established names. They likely, especially initially, they likely find buyers, okay, because that's the first place they go for rotation. But when that rotation gets healthy, it broadens out. Right? And we're seeing that, we've been seeing that in the industrials as well. Okay. And I think that's here what pretty much you're seeing here, right? So what you're looking at this chart, systematic funds are in the blue. They're really the only ones, the only crowd in this market that got aggressive and got involved in this rally off the April correction. Okay. You see here, according to DB, systematics as a whole have chiseled off some of that long exposure. But look at discretionary. All right. And this is, again, what has kept me bullish throughout, or constructive is the better way to put it, throughout, is that even if you get a market pullback or some volatility, whatever it may be, you have discretionary investors, they're not even long of anything. Right? So as soon as they get bared up, they're dipping their beak on the short side again. They're going to be already aggressively short. And that's where I think you start to see money rotate into other areas, right? You get short covering on from some of these shorts, and that all helps keep a bid in the market. Okay, so this I think is a bullish, is part of in the bullish column, even with systematic funds being as long as they are and starting to unwind a bit. That whole discretionary crowd is already net short again because they were never long. Okay, so they have no exposure in any of this market, the area of the market that I just explained. This is, you got indicators like this, right? And I'll put the two together because I know you guys would ask for it. This is Goldman's positioning indicator. So it's back negative again, right? And at first glance, you're like, wow, that's great. Okay, but here's the big problem with this stuff. A lot of the positioning sentiment and indicators, okay, that look quite favorable right now are that way because we haven't had an update from CFTC data in weeks because the government shut down. All right. So the last we know that Sharpies, commercial hedgers, dealers, were actually net long equity indexes as a whole. Okay, they didn't have any hedges on, they were net long. But we have no idea what they are right now. No idea, right? The last we heard, hedge funds were short the S&P 500 futures, right? Large specs, I guess is the way I should frame it. We're short the S&P 500. We haven't had an update in multiple weeks now. And I don't know when the next update's coming because the government's got to reopen. And then I remember the last government shutdown, I had to play catch up for a few weeks before we got a clean update. I think. I don't remember. So I don't know when we're getting this data again, up-to-date data. This is Sharpies. Last we heard from them. Okay. But, you know, the last thing, we don't want to see Sharpies down here, obviously. And, you know, I doubt they're there now, but I have no idea. I have no idea. All right. So this is a big problem for me, just the uncertainty of it. All right, this is the uncertainty. So I think this kind of puts a bow on just how I was looking at things over the last couple of weeks in general. All right. There's some uncertainty out there. There's not enough reward for me to take the chance through the uncertainty and the risk out there. All right. There's a decent amount of risk out there, to state the obvious. That I think it's a perfect time. It was a perfect time to lighten up, clear your head, and see how some of this stuff shakes out. Okay. But unfortunately, it doesn't shake out all in 1 week, right? It doesn't shake out all at the same time. So what I'm getting at is, and what I'm going to do is, I'm going to stay patient. Like, it's funny, on the last webinar, we talked about this, whatever, and then the speculative names sell off. And, I mentioned that at least through next week, I'm not doing a thing, because next week you have all the big earnings you can think of. You got the China-Trump meeting. That's next week, right? You got the Fed coming up. All right. So you got a lot of things going on next week. But it's funny because I get asked, oh, are you buying anything? No. I mean, what would change from last week? The main reason is we don't have clarity because of earnings season that'll flow. What would possess me to just start aggressively buying something? Why? Because our GTI got cut in half. I just find that funny. But, at least personally through next week, I'm probably not looking to do much of anything. And the other thing you guys got to understand too, and I get it, some of you, don't maybe, I think, don't care enough about it. You're not putting on that much risk, so you don't have to worry about it as much. Okay. But if I'm telling you, like, I don't trust any of the flow out there. Okay. This week and next week, there's not anything you can tell me about any of the flow that's going to convince me into feeling bullish or bearish about a stock. Now I could sit here and lie to myself and say, oh yeah, the buying in XYZ today, that is actually different for whatever reason, but it's not. It's not. So I'm flying in the blind right now in regards to flow. Completely in the blind. And most of you in the Steam Room know that. All right. I haven't put a top bet list in now a week and a half. Probably, unless there's some post earnings name that catches buying. But you still have such a big week next week that even names that reported, I think, have to be considered earnings related, because you have names that can impact the whole entire market. You understand what I'm saying? I'll give you an example. If Microsoft, right, is due to report, okay, we see it all the time. They play some of these cloud names off the Microsoft quarter. They use to hedge, right? Like a D-Dog or stuff like that. Doesn't mean D-Dog reports, but Microsoft is a big enough quarter where you see hedging in other names because of it, right? Or a lot of times, an AMD will report and you'll see other semiconductors see activity. Sometimes even more than the name that's reporting, because maybe the IV is not as nuts. So there's nothing clean in the order flow right now. That's the way I look at it. There's nothing clean, because I have no way of knowing whether it's clean or not. And while I feel like that, there's no reason for me to do otherwise. Why just buy something just to buy something? I guess, I'm not saying you can't do that. You could do that, but you shouldn't, that's not why you should be on this webinar or a member of the Steam Room for me to just tell you to do that. That doesn't make any sense. All right. Oh, and this is, by the way, hedge fund exposure in individual names. Okay, which is still, again, no extreme, but they're net short. And they have not much supply. Again, in the overall market, they're more long in certain names than others, obviously. Okay. So to put a bow on things here, again, I think we're fortunate enough that already we've seen certain areas of the market correct, right? Even like the utilities, that was the hottest group on the street, has come in a bit, right? So while the market's going higher, that's all good that's happening, right? The sooner the better, but it doesn't really clear a whole lot up here. The only good thing about it is that it started already, right? The quicker, the better. But it doesn't really clear anything up here. Nothing. Doesn't clean anything up. Because like I said, even these speculative names, I'd be really careful. If you're looking to trade them, you trade them. I still would be careful in the options market because you're getting robbed because of the volatility there. But if you're playing, if you're trading the equity, make sure, because again, you hold them overnight, stop losses don't apply. So make sure you understand your risk with a lot of these things. Anybody have any questions? Yeah. And listen, I know it's not the sexy thing to talk about. I know people with handles that I can't even make out like to come on here and just ask about symbols all day long because that's all they care about. But fortunately, I don't approach this game that way. So if it falls on deaf ears to some, there's nothing I can do about it. Right? There's nothing I can do. But does anybody, especially for those of you who have been around or STEAMROOM members, anybody have any questions on any of this stuff that we look at? Or anybody curious about something we didn't talk about this week that we usually talk about? There's a lot of things, just in interesting areas as a whole, just interesting areas. And I think we were blessed, as you heard me say, that we didn't really feel the true impact of correlation being this low. We had the luxury of these speculative names being so strong and so bullish, so much momentum that it just didn't apply. It didn't apply. Like I'm trying to draw blanks every time I'm on this webinar. But if if Trump is looking at rare earth minerals, then find a rare earth mineral. Right? Doesn't matter. Just find anyone we can get our hands on, and they all move. Like it's the total opposite of what you were saying at the same time in the rest of the market. The rest of the market was completely different. Completely different. As we looked at, you had, how many people like I run into, even just regular guys that think Microsoft has been going parabolic for the last 3-4 months. They don't, because obviously they're not keeping tabs on it day to day, but they hear all this bubble talk and they hear how bullshit and they think like it's the same names that keep going higher with the indexes. Not realizing that there's a lot of different animals out there. Like we said, right? What would we say? There's like 3 to 5 different type of markets out here in one market right now. No. And that's what I mean, soccer boy. Like, and it's funny because people like can't get a grasp on that. I guess they think of it as extreme, but soccer boy, there is nothing that it has got me excited because I don't know if it's clean. Like, here's what I mean by that. There'll be CoreWeave, okay? They came in yesterday and they bombarded CoreWeave. Millions and millions of dollars of, I think it was November calls, maybe December calls. Millions. Okay? But CoreWeave reports in a couple of weeks. You know, and it's really common that you see names, you know, especially popular names, going into earnings that see huge size. All right? Why? Because, again, if I'm a fund and I own equity in CoreWeave and I'm a little uncertain about earnings, I think there's a little more risk in AI names going into earnings this quarter. You know, maybe I want to sell some of my equity and replace it with calls. So this way I have exposure if CoreWeave has a strong quarter and the stock appreciates off it. But if the stock shits the bed off the quarter, I don't have as much principal risk, right? You see this type of strategy often. Guys, you know, back when I came into the game, that was the primary use of options. It wasn't for speculative purposes as it is now. Now it's pure speculation. Anybody out there right now that we talk to thinks when they hear options, they think of just directional betting. You understand? But for professionals, that's the last thing on their mind a lot of times when it comes to the option market. They use it for hedging purposes. That's its sole purpose. So when you go into earnings or these binary events, you have the beauty of utilizing the option market to take down your risk. Otherwise, you can blow yourself up as a fund, right? Again, another side, CoreWeave. Maybe I shorted the stock, right? Maybe I'm a fund. I took a short position in CoreWeave. But now we're going into earnings into the quarter, right? Especially next week. You got some big AI names reporting. Maybe I got to hedge. I definitely have to hedge some of that risk, right? I can't go in naked short into earnings season. CoreWeave. How do I hedge that? I buy calls. You understand? Now, I'm not saying I know every fund and individual who's doing that, but I know when we get into earnings season, there is an elevated, enormous amount of that type of action during that time. Does that make sense? Right? So when we get into earnings season, especially like next week, I call it the heart of earnings, where all the big names report because they have such an impact on the whole market as a whole that everything is considered an earnings play. Like I mentioned earlier, right? You need to hedge anything in the market going into next week. Whether a stock has earnings or not is irrelevant because Meta and Microsoft can take down the whole entire thing. So you see an uptick in hedging. So that was a long answer, Soccer, to you to answer your question. Yes, at this point in my career now, never used to be that way, but at this point in my career now, like there's nothing out there I'm interested in really. Everything is for intraday purposes. Okay, so I'll give you an example. I didn't play it yesterday. I probably should have, but the equity is a little pricier than I would like. But when that CoreWeave action came in, I like to get in the middle of that and day trade it off the momentum. But that's the extent of it. That's the extent of it. All right, but again, come on this webinar in a few weeks and we'll be talking a completely different tone because we'll be talking about post-earnings flow. Now the company reported earnings, right? And the following week, we're seeing somebody build accumulated position. That's as clean and as bullish as you're going to get, right? So the total opposite. So it's worth waiting a few weeks. What about my IWM position? That's a good question. I mentioned it what I was doing a couple of times on this webinar, but just so you guys have an idea. I started off with TNA, okay? For again, everybody's different, but for me, I had a nice size stake of TNA, not the options, the ETF itself, okay? And what I've done, what is it now? Probably a month now, at least a month. Yeah, figure a month. A month ago, what I started doing was I was selling that TNA, the equity that I had, and moving some of that money, more so profits, I guess is the better way to put it, in IWM calls. So right now, I'm in IWM March 235 calls, and I still have a quarter of my TNA position. Eventually, what I'm getting at is eventually all I'm going to own is IWM calls with a lot less principal at risk. You understand? So I'm taking profit, but and this is why you're probably asking, ABT, I want to be long of IWM for as long as I possibly can. You understand? And that's why I'm taking this approach. All right. So let's say we get a little hiccup in the market and IWM, comes in. Okay. What I'll look to do is I'll look for an opportunity to get long some TNA again. You understand? But I'm not going to do it up here. I want to do it off a pullback whenever that may show up. If we don't get a pullback, I'm in IWM March calls and I still have some TNA available. Okay. So that's, again, it's no science there, right? That's just my personal method. What I would recommend is if you've been in TNA, if you've been in calls, I recommend you roll them. Roll them. So what I would do is, I don't know what month, how far out you are. If you're already far out enough time, you feel like you're further out enough, then just roll up strikes, take some profits off the table, whatever you feel like you want, what risk you want to take off, and keep some. That's what I would recommend. The thing with TNA, though, is you got to be careful with these things. These things aren't structured for you to buy and just hold. You understand? If you get into a pullback in the market, sustained pullback, a correction, this is going to come down aggressively, right? Because TNA is 3 times IWM. Right? And then when you get multiple days of weakness, right, that starts to add up. And then what happens is this, okay? On the way back up, if the percentage stays the same. So TNA is still 3 times IWM, but you'll realize like IWM will go to new highs, okay? And like TNA is nowhere near new highs. You understand? Because the price comes down and the percentage stays the same. Okay, I probably made everybody even more confused. What I'm trying to get through to you is that these levered ETFs aren't structured for you to just hold them and put them away. I wouldn't recommend doing that because a correction comes along and you're going to get this. You understand? Like, look, TNA was down from 55 to 17 in this April correction. That's like a crash. Oh, good. So then you're good. You're good, IBT. You're good. Yeah, I think this has not changed. My thesis in IWM, big picture wise, it's big picture. Nothing we're seeing here. Again, the speculative names, I don't think have anything to do with that. A lot of those names were micro caps. A lot of those names aren't profitable. They're just hype jobs. What I'm looking for at IWM, I'm looking for it to benefit off an easier Fed, right? And an improving economy at some point. So when that takes place, what you're going to see is real small cap names, real companies, not zero revenue companies that lead it higher. That hasn't happened yet. You understand? So the big picture thesis on IWM, the small caps, hasn't even started yet. Okay? We just saw the beginning, which was the squeeze of the shorts that we were talking about, right? Everybody and their mother was short the small cap group, right? That was the cherry on top, right? That allowed us to have some cushion here to maneuver as they get squeezed. But the thesis on it, that didn't even start to play out yet. And that's why I want to be long IWM through any pullback. You understand? And that's where it gets tricky. Holding through pullback. Holding when it just goes up like this is easy. Yeah. If not end of year, I think 2026 might be the year that of that type of trade. Again, if it plays out that way, I could be wrong. I could be wrong, and the Fed is really late, and there's credit contagion, and it's a complete disaster. I certainly could be wrong. But I think the good thing about it is that, unlike the rest of the market, there's no exposure in this group. It hasn't benefited off any bull trend here in ages, in a sense. You could go back to 2021 high. It's been dead money. And now with getting the Fed back on its side, and maybe some of this Trump fiscal juice coming into fruition, these things start to benefit. So again, risk reward wise, it's still really appealing. Obviously there's no guarantees in anything, but on a risk reward basis, it looks pretty good. But yeah, good question. Anybody else have anything before we wrap it up? No, and ABT, that's kind of what I'm looking at, right? Like I think that's kind of the missing link here in this market for it to continue higher. Like for this market to continue higher, I think our IWM thesis has to come to fruition, not just for IWM, but for the rest of the market that pretty much is in the same shape IWM is. You know what I mean? Like the Fed cut rates, start to get things rolling again. You start to see some growth in the economy. You start to see those AI tentacles spread out and touch other sectors of the market. And we start to see real names, not just story stocks, not just spec stocks, some real names, the cyclical part of the market get involved. Yeah, exactly. Especially now, right? Like, I think if you're not in IWM, if you feel like you're going to miss the boat, whatever, you buy a little here. And what you want to do is you want to try to wait and see if we get some sort of, there's likely going to be a pullback at some point. and try to add off pullbacks, because that's what I'm generally looking as far as TNA is concerned. To get back into TNA, that's what I'm looking for. Try to take advantage of pullbacks whenever they show up. But again, it's tricky. Like I said, I'm constructive on the overall market because of the reason we just spoke about. But there's other areas of the market that just got really too frothy. Like, another thing that just rubs me the wrong way, and you guys can relate, the pump and hype out there is out of control. Like, we hear another person or outfit pumping some speculative name every 10 minutes. Every 10 minutes. There's guys on Twitter that are touting some small cap name, and it's making the news wires, right? Because you got retail piling into it, Beyond Meat, right? So now everybody's become a pump artist. Zero Hedge is pumping this thing. Everyone's into the pump game. You always see that at the end of these speculative type things. It's not that easy that, oh yeah, I'm just going to buy a shitload of XYZ and then I'm just going to pump the living daylights out of it and everyone else buys it and we all make money forever and ever. The end. The game doesn't work like that. Right? The first few who do it will make some money, but the last few who get involved end up getting shafted. We know how that works. Right? That was like the Kathy Wood trade. You used to get an email from ARK and Kathy Wood. Here's what I bought yesterday. And then everyone used to just buy those names. Oh, Kathy Wood bought this yesterday. I got the email. Only this game was that easy. All right, just wait for the Kathy Wood email that everybody gets. Shit like that don't last. Or people, I'm not even going to mention names, on Twitter pumping SPACs. Right? We know how that ends. Huddle. Diamond hands. We all know how that ends. So, that's what I'm saying. Like, I think we got to get to that point where you hear about one of these outfits pumping something and there's no pump. You understand? There's no pump left. And then it doesn't even become news anymore because nobody cares if they pump it because they've been losing money in every pump. They don't even pump anymore. Yeah, it doesn't like, because again, it's just, think about it. If the game was that easy, we'd all be trillionaires. Huh? All we got to do is buy something and then go on social media and pump it to everybody. And then they buy it and they make money. It's like a Ponzi scheme, basically. It could go on for a little bit, but it always ends badly. Always. So, we got to get to that point where they kind of ruin all those folks, and then we could start looking at these speculative areas of the market again. But right now, and you guys know I love that stuff, but I remind myself to be really, really careful. Again, trades, they're just trades. To me, they're just trades right now. And for me, they're just day trades. But I'm saying, even for those of you who like trade them, you got to look at them as trades. You don't want to get caught holding a basket of this stuff. Like, look what just happened. Look what just happened. Now, again, most of you aren't buying the highs, but there are people about buying the highs. 2 weeks ago, there were people arguing with me, right, about these names continuing to go higher. You own a basket. You own 5, 6 names deep. You have calls in any of these things, and they're down 50% in a week. Your options are zero. Zero. In all 5 positions. All the money you made in this incredible bull rally that we've had, gone. Bye-bye. That's the risk right now in these things. That's the problem. And again, maybe a couple of weeks ago you didn't believe you didn't believe me that could happen in that quick of time. It just happened. It just happened. Every single one of them. Oh no, not the rare earth plays. It just happened. Every single one of these things, every single one of them came down 50%. There's a lot of risk in these things right now. So, that's why we look elsewhere. And again, when we start seeing names that trade around the same price, but they actually have some fundamentals, because again, some of them had, like when this thing actually came alive, it had some fundamentals to it down here. But you can't make the same case here at $70. It's a whole different animal. So we're looking for the next Irene, but a real Irene. You understand? We're not looking for a speculative pump play, because that thing is dead right now. Well, I shouldn't say dead, because again, I don't know for sure if it's dead, but there's way too much risk. Way too much risk. No, can you imagine? I mean, already I can't believe they let it get this far, Sahil, with Bitcoin and all these crypto millionaires. I can't believe they allowed that to happen, to tell you the truth. But even that, wasn't easy. How many times did crypto crash? To sit through crypto crashes, you have to have an unbelievable entry early. It's always the early people who make the money. The people come late stage, sometimes they get a little enjoyment, and then they feel the most pain. But again, the good news is, as crazy, as big of a frenzy as it had become, it's really not that big of a deal to the overall market. It really isn't. Not yet, anyway. We've seen it. You have these names are all off on an average of 50% off the highs, and the market has done what? Look at this, right? So you had a stealth correction in all these bubble stocks, basically, right? You had a correction in all these bubble stocks, but the S&P 500 hardly burped. Yeah, I don't, again, that's, gold and a zero revenue stock are two different things. You know what I mean? I'm just being honest. I have no idea about this gold thing. I don't know what's going on. Again, I know what everybody else knows, but that doesn't justify this. I don't know what is going on in gold. I really don't. Gold's a different animal. Gold's not a zero revenue quantum name, that's a pump and dump. I mean, gold is widely owned, So I don't know what's going on in this gold that it's so strong like this. I don't know, And I think the true test is going to be if that side of the trade does come to fruition, where the Fed does cut and the economy starts to see growth, right? The Trump policies start to work and all that, and you start to see growth. How's gold reacting to that? If gold goes higher in that too, I don't know what the hell to say. Yeah, I really don't know. Again, it may be doing it for a reason we don't know of yet, and we're going to find out. That's the problem with these things. It's not like a speculative stock. Gold, the sharp money may be pricing in something that we're really not comprehending right now. I don't know. Some people think the debt, right? The Fed. But like you see, things like Bitcoin on the speculative side not really doing anything. So I'm just being honest. I don't know, Theo. I'm not ashamed to say I don't know. I don't know. I don't know. I certainly wouldn't buy it up here, of course, but I don't really have much of an opinion on it. And again, I think the true test comes if things do rebound, economically. Can gold sustain a rally through that too? I mean, but maybe we find out why this has been doing this. Because I don't know, is there a shortage of gold? You got central banks buying gold. I don't have a full grasp on the fundamentals of gold. I don't know what's going on. So, but it is amazing. It is amazing. It is amazing. This too, almost like if this was a stock, you would think it's almost like a blow-off move, like some of the speculative names, no? Like a blow-off top. That's the price action. But I really don't know, guys. So I can't really offer any insight there. All right, my friends, I'm going to wrap it up. Let you enjoy the rest of your Thursday evening. All right, so I think it's a good time, especially next week. You have more than enough action intraday to wet your whistle. There's some decent movement if you want to participate. If not, it's not your bag. There's nothing wrong with just chilling out and waiting a week or two. Let the dust settle, right? Let the skies clear. Let the flow come back, and we get our edge from sweeper activity again. And usually, it's always well worth waiting. You're always thankful you waited. But we shouldn't, coming off the last few months that we shouldn't have FOMO here. No, none of us should have FOMO here. All right? We should be worried about holding on to the bulk of what we made. That should be priority number one. Yep. Enjoy, everybody. STEAMROOM members, I'll see you mañana. The rest of you, have a good weekend, and we'll do it again next week. Take care, everybody.